start our pre-show to get people who are newer around here oriented to what we do. Whether you're new to trading or just new to our group, welcome to the opening playbook. Our mission here is to be a bridge for new and advanced traders to go beyond outdated market narratives into deeper understanding. We offer market insights as timely analysis of what's moving the markets right now, trading education to help you build real skills beyond surface level tips and tricks, and live trade ideas, real-time recommendations you can act on immediately. Opening Playbook is a free daily live webinar. Your hosts of the show are Nathan and Graham. Nathan has over a decade of experience trading Forex, stocks, and beyond. He's worked with dozens of leading global experts on strategy development. He's obsessed with math and systematic edges in trading. He's the creator of the Income Machine, Overnight Options, and more. He's a husband, a dad of 7, and the publisher here at the pub. Graham Lindman is also an options expert with over a decade of market experience. He studied technical analysis under 2 of the top minds in finance. He developed wrap order option trades for cost-effective entries, as well as created lightning trades, moonshot alerts, NVIDIA Elite, Apex Indicator, and Newton. He's also a husband, a dad of 2, and the copy chief here at the pub. Now, a lot of people in the stock market education industry will tell you that trading is easy if you just know their quote-unquote secrets. Well, that's not us. We'll tell you the hard truth, which is that trading is complex and takes time to learn. But we make the learning process much easier. The opening playbook exists because a lot of traders have trouble succeeding because they believe many of the myths out there about the market and trading. We'll dispel those myths and equip you to become a better, more mature trader, giving you the opportunity to be more successful, whether that means using our systems, tools, and strategies, or just trading on your own. Remember, our goal is to be a bridge for both new and advanced traders to go beyond outdated market narratives into deeper understanding. Now, it's important to remember that you should never trade with money that you can't afford to lose. Of course, nobody likes losing, but there's a difference between losing some of your investment portfolio and losing the rent or grocery money. So please don't trade with money that you can't afford to lose. And let's be ultra clear, any type of trading involves losing some of your trades. It's inevitable. Controlling your risk will keep you in the game, and we can help you learn structures and strategies to do just that. Our promise is that we'll be honest and transparent with you about what works and what doesn't, what you should make your own decisions about, and what rules we believe you should always follow. And here are some rules of the road to get you started. Stay calm. Try to trade without emotion involved in your decisions. Go at your own pace. Don't try to keep up with us or other traders. And ask questions freely. We really do want to help in any way that we can. And to help you get started, we'd like to offer you some free information. Answer a few quick questions by clicking the link in the banner I'm posting above. And for answering that quick survey, we'll give you custom content to better help you by using your feedback to improve our classes and education, and give you a free options cheat sheet, a digital, easy-to-understand options guide that will look something like this. Now, I'd like to give you some tips on using our webinar platform before we get started with our regular program. The button next to number 1 here, we call the hamburger button. That will collapse the green column on the left, and you can leave it collapsed because we don't use it for anything. Number 2 is the pause button. You can pause and resume the presentation whenever you'd like. Number 3 is the mute button. You can mute and unmute the presentation's audio. If you find that you suddenly lose audio during the presentation, make sure you haven't accidentally clicked or tapped on the mute button. Number 4 is the main announcements section, where trades that we take in the current session will be posted, as well as helpful links that can always be found there. Now, this section will only be visible if you're on a large screen. If you're on a mobile device, you won't see announcements here, but we do have another area that you can see them that we'll get to shortly. Number 5 is the toggle for going between light and dark mode, whichever you prefer. Number 6, the monitor icon will enlarge the presentation area without hiding the communications or chat area. Now this button is shown in 2 places, and I highly recommend using this because it'll give you the best view of the presentation without hiding the chat from you. Number 7 is the picture in a picture button. This will reduce the presentation to a floating window so you can do other work behind it, such as go to your broker platform on a mobile device. Number 8 is the full screen icon. This button will enlarge the presentation to take up the entire screen, covering everything including the chat area. Number 7 and number 8 may or may not appear for you depending upon what device and browser you are using. Number 9 is the low latency button. Toggle this off if you're having any audio or video issues, such as buffering. Number 10, all the way on the right, is the communications area. This is where group chats, announcements, and private messages will appear depending upon the tab that you have selected above. At the bottom, number 11, is where you'll type your outgoing message. You can press enter or tap or click on the green arrow to send it. Number 12 is where you can start a private message to a host by tapping or hovering on one of their group chat messages and clicking the double speech bubble icon that appears. Now you can only private message hosts, not other attendees. At the top, number 13, that button will collapse the communications area, giving you a larger area for the presentation, but you won't see any of the communications that are going on. Number 14 is the group chat. This is where you'll read and write messages that the entire group can see, and this is the default tab that you'll see when you sign in. Number 15 is the announcements button. This is where you can see those same announcements that were in the larger area that we covered earlier, but this will be available whether you are on a mobile device or a larger screen. Number 16 is the private messages tab. This is where you can see any conversations that you have started with the hosts or they have started with you. And if you have a new message waiting for you, you'll see a red dot below this icon in the toolbar at the top. And last but not least, number 17 is the button that will pop out the communications area into its own window. This is useful if you have multiple screens and you want to go full screen on the presentation and view the chat in a separate screen. Now, we have a version of this guide that I just went through that you can view on your own. The URL to get to that guide is marketspg.com/wisepub, and there's now also a link to it in the announcements section. And that's it. So once again, welcome to Opening Playbook. Don't forget to complete that survey to get your free cheat sheet. And now we're going to play our theme song and get to the regular show at the top of the hour.
Flip the page, it's time to start the game. Graham and Nathan calling out the names. Opportunities knocking loud and clear. The Markets Playbook is finally here. Opening Playbook, we're ready to roll. Daily moves that fire up your soul. Strategy sharp like a razor blade. This is where the big plays are made. Oh. Charts are lighting up the morning sky. They spot the trends with the hawk's eye. Options and plays in a live display. This is where the big plays are made. Oh. Charts are lighting up the morning sky. They spot the trends with the hawk's eye. Options and plays in a live display. Every move counts in the game they play. Opening Playbook, we're ready to roll. Daily moves that fire No confusion, no spinning around. With every trade, they set the tone, making big calls from their trading phone. Opening playbook, we're ready to roll. Daily moves that fire up your soul. Strategy sharp like a razor blade. This is where the big plays are made. Oh, this is where the big plays are made. Oh. Opening playbook, we're ready to roll. Daily moves that will fire up your soul. Strategy sharp like a razor blade. This is where the big plays are made. Oh.
Good morning, everyone. Welcome to the opening playbook for Tuesday, March 31st, final day of March. Hope everyone is having a good morning so far. We are
I'm
joined
having
by...
a great morning, Dave. Thank you so much for asking and being so concerned about me.
You are welcome.
I know when you said everyone, you really meant Nate. That's who you're most worried about at all times.
Sure.
How's everyone else doing? I only care about Dave, obviously, as well, but I will ask everyone. Nice pop. I don't know if you guys have heard, but we have a bit of a news-driven market right now. Not sure if anyone has informed you yet, but that's kind of where we find ourselves. And obviously, got some news now. It'll be interesting to see how this plays out because obviously the last couple times that we've got war-related news, we have essentially had opposing news within, a very short period of time each time. So we will see if that is the case again. And I didn't dive too deep into it because, for one thing, I'm just not sure anything that I'm going to read is real anyway. But for two, I was just busy. And it sounded like it was like a catch-22 to some extent, where we said, hey, things could be resolving quickly. Also, we might be sending, people over there. So I'm not sure exactly how that's going to resolve, but we'll see. If we get any kind of follow through today, or even holding the line today, at least that will show us that the market has some appetite for not just immediately selling off any positivity right now. And I think that's certainly been the case where selling pressure has been overwhelming. Right now, I see the most likely path as a retest into some of the support resistance that we broke, and then a decision point from there. So I actually would say that I'm maybe a little bit bullish in the very, very short term here to see if we get a retest, and then would probably be net bearish from there. But open to a break in either direction. This is kind of what I'm talking about. We broke through here. We never really got a good test after the close last week. Yesterday, it looked like it was going to start making that move, and then obviously got sold off even lower. And so maybe we'll get a bounce here, a sustained bounce over the next week or two that gets us back into the 650 area, which is now only about 1% away with the big move today. And if we do that, then I think we kind of have a next decision point, which, like I said, I would be probably net bearish overall if we get a test back into that level. But because we're so headline driven and news driven, I wouldn't be stacking shorts immediately. I would want to see confirmation. I'd be, kind of hesitant to get too excited and directional, even if we got a very clean technical look back to the upside. So we shall see if today holds up. If it does, I think the odds of kind of testing back into 650 are much higher. Looking at the overall market real quick, obviously huge bounce today. I actually just sold some SPX call spreads, like I mentioned I would, with the VIX still where it is, not quite as high as it was yesterday, but still lots of volatility. I got about a 9% ROI on selling SPX, another full 1% out of the money. So it's kind of like a take on the Jeffrey idea of go way out of the standard deviation, get a little bit of income, and if the market rips higher and blows you out, well, at least your other positions are cooking in that case. So that's what I did. SPY would have to finish about 2.7% close at 4 p.m. for me to lose that trade. If that happens, yeah, I'll lose 10 grand, but that also would mean the rest of my entire portfolio moved up another 1%. So that's a deal I can live with, certainly. It is interesting to note the thing that's caught my eye over the last week or so when we've had these up days and down days. The mags has started to round out a little bit. I mean, don't get me wrong, mags are still brutal, but they've started to round out a little bit here, both to the downside and to the upside. So if you look at SPY, for example, when we blasted through that low and then are up 1.6% today, and you compare that to the mags, we had less of a drop below the lows and we're up 2.4% today. So in relative terms, this collapse was a lot steeper, but since about mid last week, the mags have kind of flipped on relative terms and are a little bit stronger. Now, again, I say relative terms because that's not a strong chart, but it's just interesting to note that maybe they're beaten down enough where it seems like, we don't just want to pile on the mega caps to the downside. Although, of course, I would suggest to you that if we do go into full bear market territory and the SPY is down 20%, yes, the max will take a much further beating. I don't think they're going to be safe in that environment. But if it's kind of a ho hum in between, rotational, sideways, slight jump back, to near the all time highs in the next couple of months, I actually think the mags could be an outperformer because they have been pretty beaten down. Some of the PEs and the mags are lower than some of the PEs and the staples, for example, right now. And we saw kind of the appetite with Meta as an example after the massive sell-off. Even yesterday, there was just no appetite to sell Meta down even further. So I think that's an interesting thing to keep an eye on, and maybe even kind of comparing that to SMH, which took its big hit yesterday, but has been the area that's held on the strongest, which is chips, and see how they perform relative to the mags. No surprise here on our sector view. It is very, very positive across the board. Of course, the market's up 1.7%. So who's surprised to see a lot of green in here? The one thing that I do think is worth noting is that staples are down a bit. The reason, they're not down very much, but they're down a little bit. And the reason that I think that's worth noting is because it goes back to what we talked about Friday and yesterday, is that even though this market is still certainly ugly, we are seeming to get a little bit of normalcy back in, where staples are acting as risk off, other things are acting as risk on. They held up much better yesterday. They're taking a little bit of a drop today as money is obviously liquidity going into technology, industrials, and things like that. So just keep an eye on that, because in my mind, even if we're net bearish, which I think we would have to agree that we at least are for the short term, even if that's the case, if we just get a little bit of more normalcy in the markets where, staples are up on some of these down days, energy stays up on some of these down days, utilities is positive or at least break even, it's going to be a little bit harder to have those 2% flushes when you have at least some sectors contributing as risk off and rotating to the positive side. And so to me, that directly correlates to the VIX will probably chill out and even start coming down, even if we're net bearish. And so I think, kind of keeping an eye on how the actual sectors rotate is our best indication of that. And then just the last thing to look at our heat map. Well, it's a pretty positive heat map. Again, the market's up 1.6%, so I don't think anyone's surprised. We have a very, very positive heat map with lots of mix across the board there. And you can see, I won't bore you, but one of the things that I do find interesting is financials seems to be overperforming on these up days, underperforming on these down days. Seems to be a real catalyst in both directions. And so, again, if we make a move to the upside, which I don't think we can get real confident about that yet, financials, I think, are another interesting target for that potential move to the upside. So just keep an eye on those as well.
Thanks, Nate. Nice little update there.
What do you got going on, Graham, in this just
pull up this
lovely calm market that we have?
I gotta pull up this image. Let me find it. I posted it last night in Telegram. It cracked me up. Although I'm actually, let me pull this image up here for you guys. This was me last night when I saw the stock market popping on Trump's news. How secure it feels to see the SPY gapping up again. There's your little lock in the door right there, little Cheeto. It's about how secure it feels after seeing over and over and over and over again. We get a good positive open and we just fade it right away. Now today we're sticking it. So far so good. Now well, I guess we did just see a tiny blip back right now. I'm just looking at the 60-minute chart, but I'm actually surprised, Nate, that we are sticking this one compared to some of the other ones. I feel like this was the most bearish news of all, personally.
It is weird, man.
Basically, we just said we're willing to give up on the war, and you don't even have to open up trade for us again, and we can just keep gas prices high. Is what it sounded like to me.
Yeah, but I guess it is weird. But I guess where it does make sense is that energy didn't peel off down 6%. We're not getting like a disproportion. Okay, energy's back down. It's almost just like a fear trade. Like, okay, well, yeah, energy might stay up. We might be spending $5 a gallon national average, but at least we feel less fearful across the board, and so liquidity pump back into everything else. So that to me, I guess, makes some sense, is that it's not necessarily a fundamental shift in the expectations where, oil's down 15% today and everything else is up. It's actually kind of like, yeah, well, maybe we're screwed on energy, but that's okay. At least we're not going to be at war.
Oh, who needs energy right now?
Yeah. I mean, that's kind of what it feels like.
Who needs energy? It's not like we've seen energy go crazy and been the top priority of this AI infrastructure build out or anything. I know it's oil, but
Well, and
still.
the
soldiers aren't fighting, but we can't bring them home because we don't have any fuel.
Well, actually, it is. I mean, it's not funny. War is not funny at all.
No.
But it is interesting that Trump said we're okay if we just end the war and you guys keep the strait to yourself and don't let us through. But also, 15 minutes later, said we're going to send in 1,000 troops to get all your uranium while we're at it, which I guess goes and plays into the nuclear. And maybe he's like, forget oil. That's from the 1800s. We're going for the nuclear energy,
which we obliterated like 6 months ago.
Yeah.
Well, it is. Yeah. I mean, there's so many interesting things. And again, I mean, I'm not going to sit here and judge things that I'm sure a lot of people know a lot more than I do inside the cat. Like, I'm sure they have a lot of information that, we obviously don't understand, but it is just, there's so many different dichotomies that are interesting. Like, we are talking about the drill baby drill, administration, at the same time kind of saying, well, we'll not worry about the oil. Let's go get the uranium. It's just, there's so many kind of different things at play, but I do think that it is a lot of smoke and mirrors. And I think a lot of it is purposeful. I think, Trump is trying to basically do the thing that he often does, where he makes big kind of outlandish statements. And what he's really trying to say is, you guys go deal with it. Europe, you go deal with it. Israel, you go deal with it. We're not actually not worried about oil, but we're making that statement to put the onus on you. I think it's a lot of like that kind of talk.
That's what I'm hopeful of. Like what Mike posted there in the chat. I saw his tweet to the UK saying, enjoy your higher energy prices. If you need oil, buy it from us. We get tons.
Yeah. So I think it's a lot of that.
Yeah.
And
he also makes these extreme statements
on that, by the way.
Just because he makes these extreme statements so that he can bring whoever he's trying to negotiate with toward a better middle. I think like instead of starting out with like a reasonable end and then meeting somewhere in the middle, he does this extreme end, and then middle is more in our favor.
Yeah.
Yeah. Well, it is funny because Morgan and I were talking about that a couple months ago, actually, I guess a year ago, with the tariff stuff, where everyone was kind of like panicking, like, oh my gosh, I can't believe how extreme he's being. And it's like, well, he did write a book where he explained this is exactly what he does in every negotiation, like 20 years ago. So you shouldn't really be that caught off guard. The guy literally wrote a book telling you exactly how he handles these situations. And I think it is more of the same. And I actually don't even think he's totally wrong with the idea of like, let's try to kind of shift that focus. And if the US economy can have more of an approach of like, yeah, we do make our own energy. We're good. We're trying to help out the world as best we can, but we're kind of good. And if you guys want to make it equitable, then great, we'll be involved. And if not, we'll kind of handle things ourselves. I don't think that's a terrible approach. It's just kind of the chaos of the way that it can come across, be communicated, war and everything else that I think makes for, big market reaction. So we'll see where we end in that spectrum. But I would say that Right now, we'll we'll probably end up seeing a lot of big claims, big talk that don't necessarily represent anything around where everything will finish.
Yeah.
I will say if that was a crunchy Cheeto instead of a puffy one and was like a year old, that would be
Yeah.
better than a deadbolt.
Yeah, that is true. That and you squeeze a McDouble in there from 10 years ago and you're locked tight. Yeah, someone did post Bob G said funny prices were higher under Biden. No one says that. Yeah, if you actually I didn't know this. Again, I'm no gasoline expert. I don't go to the gas station every day and chart prices. But here
I
was
do
during
every day.
2022, inflation adjusted, 5.50 a gallon. I don't remember hearing much about that in 2022. So, hey, oh well, we're not going to get political here, even though we just kind of did, dabbled our toe. We don't know everything. Wish we did. It's easy to judge from the outside looking in. We can, regardless of which side of the fence we're on, we obviously root for our leaders to do what's best for our country and for our people. So obviously what we want, no matter which side of the fence you're on. Uh, we'll go ahead and get rolling today in the weekly breakdown, Telegram of the week. Just reiterating for you guys where my line in the sand is. If you saw yesterday, I did start dipping my toe in the markets just the other day. I think was it yesterday? I told you I was all in SanDisk, or Friday. I can't remember. But
I think Friday you went all
Friday,
in.
man, yesterday was brutal. Holy moly! I think SanDisk was down 6, 7, 8%, something crazy. It's back today, believe it or not. Quiet market.
Back at it, baby.
But we'll cover this again. But again, I'm trying to keep you guys updated in Telegram with what I'm doing in real time. Obviously, that line you can barely see here. We'll get a bigger picture soon, but stayed the same. We'll get an update there. Gold trade update. This is just sad. We were up $9,000 at our peak, a couple wipeout weeks. I booked this week's early because it was at 445. That would take a miracle for it to get there basically by Friday. So I went ahead and took this week's early for a partial loss. So we're now 18, or I'm 18-3 on the books for the gold trade. We're at $3,000 in booked profit, which is still good. Can't complain about that. But we got about $2,000 in losses open. It probably is a bit better today. Let me just go look. I'll give you a number. 1,300 in losses open today. So still net positive. But man, Nate, I know you're the income machine guy, and I know you're very, very good at it. This is why I tend to stay away. But I go all risk, low win rates. Yeah, because it's just painful when you're up $9,000 and then within 2-3 weeks you lost most of it. But hey, I'm gonna keep with it, stick to it. Looks like gold is bouncing back. Should go in. I believe still a great run for the rest of the year and going into next year. We'll keep this rolling regardless. Quick recap from last week. This is what I told you guys last week as our kind of cool chart of the week. Gold was down 9 days in a row. It has never gone down 10 days in a row. We looked at it last week and said, hey, look, what was it? 4 days later, 2 days later, very positive number. 75% chance it was going to go higher over the next 4 days. Look at 1 month. This was insane. 100% of the time it went higher over the next month. 5% average. Just since last week alone, it's about 7% now. I'll just change this because I'm looking at the price right now. Up about 7% since last week when we covered that. So we took the bonus trade. Hopefully you made some money on it. I told you guys if we got a pop overnight to sell it. If you did, you should have done awesome. If you held it like me, still should be doing awesome as well. So hopefully you guys are coming and showing up to the opening playbook each and every week, and we can give you guys some cool insights, even while we're in this painful period of the markets. For the overall market overview right now, positive across the board. Love to see it. Down about 0.25% since here, but still very, very strong. We did not fade the open. I think we opened about 1.1% higher and ran higher from there versus previously, even yesterday, we saw it open 1% higher and then close minus 0.5%, so a 1.5% swing. So it's good to see some strength. It could be a dead cat bounce, which just basically means we've been beat up so hard, so fast that we're just getting a small relief rally today. Talk about levels there. But overall, we can't complain with green across the board. I wore my green shirt for that exact reason for you guys.
You didn't do it on St. Patrick's Day, but you did it today.
I know. I'm terrible. I got pinched twice by my wife on St. Patrick's Day because I had a workout, didn't wear green. She pinched me, then I showered, came home and changed and forgot to wear green again. Got double pinched. Consumer confidence came in this morning better than expected. Job openings slightly lower than expected. Markets didn't really do much on the news. Later this week, we got unemployment, but the big stuff is going to be next week. We've got our GDP, our true GDP report on Thursday, pre-market, and then the biggest one, CPI on Friday. It's amazing. Months fly by because I feel like it hasn't been that long since we talked about the last CPI report, but they're monthly. It's like, man, these months are already flying by in 2026. But hopefully, this is going to be a really important one. I don't know how it will reflect the recent prices in energy. Obviously, gas is up, what, 30% since we started this war. We'll see what the CPI looks like, how they price it in, and how the Fed reacts. I will actually just skip ahead a couple charts here to show you guys. This is what's important about it is as of last week, we were actually pricing in a better chance of a rate hike. Let me say again, a better chance of a rate hike, meaning rates were going up by June than going down, which was insane. No one would have ever guessed that. 6 months ago, we said it's a rate cut cycle. It's either down or flat, down or flat, down or flat. Last week, it was said, better chances of them going up than going down, which was insane. This week, I'll cover that in a second. This week, it's flipped back to a little bit of normalcy. And CPI is going to be a big, big metric for that. Hopefully, it doesn't spook the bond market and the yields. Would love to see it stay into an interest rate, either hold or cut cycle, because I really believe that we are seeing a slight slowdown in the economy overall, and we are kind of in that period where we probably need to cut a little bit. All right, charts of the week. We are now 31 days into the war. I showed you this last week, which means it's the perfect timing for this chart that I cropped for you guys. Let me just tell you what it is. This is basically, if you've been paying attention, the average return of the S&P 500 1 month after a war starts. Or actually, it was like a major event, so it doesn't necessarily have to be a war, but a major event. Average first month, negative median. Only higher 46% of the time. That's well below the average. We probably should have seen this and just bought puts, honestly. I told you guys I believe there's going to be more downside over the month. We are now officially 1 month into this war. Maybe a couple more days. I can't remember, 28th or 27th, but called a month into the war. Here's why this is important. If we look ahead, this is 3 months. 3 months average since the beginning of a major geopolitical event. It flips. So 1 month is negative, bad, no good. However, after 1 month, it starts to turn. We're over the next 2 months, and this is a 3-month period, so it's going to look even better than this. I should see if I could pull the numbers. But 67% chance of going higher. 0.8% average, 2.7% median, which basically means historically the first month is the reaction, and after that first month is when people start to come in and buy the dip, buy things that are trading at a discount, and we go higher than the usual average. I believe the average is 58%, 66%. So better than average odds on a turnaround here over the next 2 months. So if we look at today's price action, it could go lower from here. In fact, my line in the sand is lower than here right now. However, 60 days from now, based on historical averages, we should expect the SPY to be higher than where it is right now. Again, just based on historical probabilities. This is one of the reasons why they don't want to cut rates right now. Fearful of the stagflation period. So this red line here is going to be your 70s stagflation period. First wave inflation, then down, then a big spike, then down, then big spike and down. Here you can see 2015, 2016, 2017, slight uptick, kind of like the first wave. Got into COVID. COVID, we cut all rates down to nothing, printed a bunch of cash, and boom, here we are. We've now tamed it. 2022, that painful bear market, much needed to get the rates back where they needed. CPI has supposedly, inflation has supposedly flatlined. I don't know if that's, oh wait, I see. This is cumulative. So this doesn't mean it's gone down. It means it's going up less than before. So this is still going higher. But we've come down to a normal and close to normal inflation rate. And now people are worried, can the Fed cut rates still and risk this third wave like we saw in the 70s? Kind of interesting. We look at like the tech cycle and how it lines up. Interesting how the inflation cycles line up as well, almost to a T. This was the chart I just showed you earlier. Again, I'm flying through this information. I got a lot to cover. I got to be off by 11. But this is the rate hike odds. Last week, I think it was 25% of a hike. Now it's like 11% of a rate hike. So that those odds have completely flipped over 1 week, which just shows you how volatile even interest rates are in this uncertain environment. If you want to buy things at a discount right now, in my opinion, it's going to be higher risk, well, I think gold is the safer play. The gold miners, if we get back to a rate cut cycle, they're going to go crazy. That's just how it works. Gold and the gold miners go crazy in rate cut cycles 100% of the time. So if the sentiment flips back, people are less scared about the war, and we see interest rates start to come down, those are going to be the best plays, in my opinion. The second, more speculative play with probably more upside is going to be a real estate stocks. Like Rocket Mortgage, I think is at $14 right now after getting absolutely pummeled last week. Let's look. Rocket Mortgage was an awesome one for us to trade during this rate cut cycle, but the second that narrative flipped, let me pull up my charts. The second that narrative flipped, boom, straight down, went from 24 to 13. In my opinion, again, I can't see the future, but in my opinion, if the narrative comes back to where it was before, if things start to settle down about this war, and they say, okay, let's remember we're still in a rate cut environment. We need to stimulate the economy a tad. People are starting to struggle. I believe Rocket will go right back up to the 20s. It's at $14 now, so that'd be a 50% move in Rocket in a very short period of time. So again, this is much higher risk, higher reward than the gold plays, but it's an excellent opportunity right now, in my opinion, if that sentiment flips back. Here's a cool one. I love these charts. It's very, very hard. Who right now, let me ask you guys in the chat, who right now is so excited to buy up all the stocks right now? Or are you more scared? So give me like greed or fear. Greed, if you are so pumped about the markets right now, you can't wait to buy everything. Or fear, if you're more worried that we could go lower. I'll give you guys a moment to post that in the chat.
Guess you could be neutral too, right?
Or neutral, yeah. All right, I'd say, you guys tell me, but it looks about 80-90% fear. Neutral. Yeah, I personally feel the same way as you guys. I'm very, very worried that we're just going to keep going lower from here. That's kind of fun. That's what the fear and greed index kind of technically gets an emotional gauge on the markets. Extreme fear, which kind of lines up with what we're seeing here in the chat. About 90% said fear. That would like perfectly line up.
Yeah, I think like for me, the thing right now is that you just can't be too confident either way. Like even if you're on a little bit on the fear side of neutral or a little bit on the greed side of neutral, you can't be too confident. You'd have to get really good returns on your risk. And with VIX so high, you're just not going to get the pricing, right?
Yeah. So here's the interesting thing. When the VIX is overdone extremely high. So in this case, the VIX ended last week at 31, highest level since last April. The tariff tantrum. That's funny. 94% above historical readings. And then he followed it up with this chart. When the VIX is in the highest 10%, so the top 90th percentile, how does the S&P typically respond? So here, the dark blue is going to be your average year. How is the average year in the S&P since 1990? 11% for 1 year, 24% for 2 years, et cetera, et cetera. When the VIX prints in the 90th percentile, how does the 1 year return? It's actually double. So historically speaking, over the last 36 years, again, historically speaking, if you buy today and hold 1 year, you make twice the average S&P return.
That's crazy.
That is crazy, especially because we all, and myself included, most of the chat there said fear. 90% of the chat at least. I feel 100% the same way. However,
is that just because a year is at least far enough out to not?
I think so. Yeah. So it's like we could go another 10% lower.
Yeah.
But eventually, when we do rebound, the rebounds tend to be V-shaped, so extreme that it turns into a double average return. So Morgan says, is it realistic to do averages with Trump in play? I don't know, Morgan. It's a good question. It's very news driven, very Twitter or X driven right now. Economy. However, think of the craziest bounce backs we've seen. COVID was insane. That was with Trump. The April tariff thing was insane. That was with Trump. So I think that the moves in both directions get a little bit more extreme. So then, therefore, the averages kind of stick.
I mean, there's AI, there's COVID, there's always something.
There's always something. So, anyways, I just found this very interesting that while we are all feeling this right now, man, oh crap, we could just keep going down and down and down. If we put the emotions aside and just trade off of fear equals opportunity, it
Hmm.
actually looks pretty good. All right, let's look at some more fear charts though. Uh, I think this was from last week actually. Yeah, this was. I didn't mean to keep this one in here. This was just showing that the sentiment is dropping. I didn't really like that chart. Here's one. Here's one for you guys. We like seasonality. We like looking at it. It's been totally off this year, which happened to us in last April too. Funny enough. But here's this guy's awesome. Ryan Dietrich posts a lot of great stuff on X. So let's look at this 4-year presidential cycle. This is the worst quarter on average. So April, May, and June typically are negative. Year two, quarter two of the presidential cycle, not so good. So let's look at some more fear here. We could be going lower over the next 3 months. But this guy responded. Good news for us. We've never had 3 consecutive negative midterm years, which we had 2 consecutive. So hey, maybe we'll have our one. We'll have a positive one this year, and it'll break the seasonal cycle. But this is kind of what that post was showing. This is our typical seasonal move for April, May, and June. Down, down, down. Granted, again, let's keep in mind this is our typical seasonal move from February to March, which I was getting very excited for, and it never happened. We never had it lined up. So let's keep that with a grain of salt. For earnings this week, we got a quiet week. We got Good Friday on Friday, obviously. So a little bit of a quiet week for earnings. We do have a couple of names. We had Bit Farms before the open today. Now this stock is up. Let me just check and see. It doesn't even show their corporate actions in Thinkorswim. That's funny. Nice big loss for them. BITF is one of those that's in the world of, hey, we are a Bitcoin miner. JK, we are now turning into an AI data center provider.
JK.
They are up 6% this morning on earnings. Same thing for BTBT, Bit Digital. Very similar play. Again, very small names, very speculative names, but I'm interested to see if we get a pop here along with this relief rally on names like, well, BITF, we already have one, a 6% pop today. BTBT could be another one after the bell today. I would just trade the underlying. I would not buy options. It's a penny stock. It's $1.29 right now. Let me see. It doesn't even show the market maker move, but I'm guessing it's going to move 10% at least on the underlying. We also have Nike after the close, which I'm not too concerned about. It's just like the biggest name on here, so I highlighted it for you guys as a retail stock. Let me just look at the chat here. Larry says the old book, feel the fear and do it anyway. I like that saying. And we'll talk about that here more in a moment. And it's so counterintuitive and hard to do. But we'll look at it here. All right, last class, market overview. I said we're seasonally bullish. We were at the tail end of that bullish cycle. There was no directional momentum. We were all news-based. I told you guys I'm looking for a breakdown to 6,200. But obviously the news is going to change everything. Until then, it's just a coin flip on Trump, Iran, what's going on here. But we did have that technical breakdown below the 200-day moving average. Next line of support is at the 6,200 level. I actually revised it just a tad bit lower, but we'll call it 6,200 to keep even. What came next? We flushed another, 3-4% from there, week over week. More breakdown. And then we got a little relief rally today, but more breakdown to the downside. So where do we go from here? Well, we are officially in those low numbers of extreme fear on our fear and greed index. And as we like to say with Warren Buffett, he says, buy when others are fearful, sell when others are greedy. We are in that point right now where it is potentially overextended in the fear mode, where it might be a good time to buy. I showed you guys that VIX chart. This one also goes hand in hand with that. Like, oh, this is typically a pretty good buying opportunity. CPC, we haven't had a very good reading from CPC. Again, it's been a little bit unreliable as multiple sources have had multiple different numbers, but still right in the middle, leaning towards puts here, meaning leaning towards buying opportunity, but nothing to see there. One thing that I did note this week that is slightly concerning is that credit risk that we look at week over week. It's turning north again. So we had that big move higher and then kind of a relief on it over the last 10 days or so, but we do have another spike. Let me just see if I can pull it today if they've posted it yet. 0.93 today, so even higher today. It's up in here. If we get above 1, that's kind of our yellow flag warning zone. So just keep that in mind. We'll look at it week over week. If you guys want this link, you can just check it every day. Right there for you guys. Any lottos? We'll probably get some lottos, but Ace, like I told you guys, I've been just trying to not throw too much out there for you guys. It's not really a high conviction environment. We're up, down, up, down, up, down, and just going to eat us on the expensive option time decay right now. Granted, the lottos will get us for cheap ones, but let me get through this and I'll kind of show you where I'm looking to buy and load up on the lottos. And probably a dream portfolio situation too. All right, market breadth, week over week. We went lower week over week. We were at 30% last week of stocks above their 50-day moving average. We're now at 25%. I'm sure that number is higher today with the market pop, but we really want to see a healthy market above 50%. We are not there. We've completely given up our beautiful, healthy market that we just finally started to get back into with this war. Percentage of stocks under the 200-day moving or over the 200-day moving average. Same story here. We've seen it drop lower week over week. Again, we want to see this about 60%. That's typically our good rule of thumb. If 60% of stocks are above the 200-day moving average, it's a generally healthy market where it's not just a few stocks leading the way. It's a multitude of stocks that are doing quite well. So all that to say, we have shattered the market breadth. Seasonally speaking, they're going to be pretty conflicting here for the next couple of months. April, May, June, presidential cycle, typically not good. Like that chart I just showed you earlier from Ryan Dietrich, it's a down period for seasonals. However, on the all years chart, the non-presidential chart, this is every year for the last, this one's 20 years, but it looks pretty similar if you keep going back in time. It's a very, very bullish period. So here says bearish, here says bullish. We look at the Fed cycle. Fed cycle also says bullish for the next few months. So that's a mixed bag. We don't have any clear signal right now from the seasonals. And again, I think seasonals are about like last on the totem pole right now for how the market's going to respond. It's going to be news, technicals, and then seasonals right about now. So my upcoming prediction for you guys, again, seasonally, we're mixed. Momentum is technically negative right now. We're living in a news-based environment. So 6,200 is still the number I have in mind, and that's on the E. So if you go to, it'll work for SPX as well. If you go to SPX and look at 6,200, or if you go to /ES, that's the E-mini S&P futures, 6,200, that is my support level. That's where realistically, technically speaking, I believe we will go. However, as I told you guys in Telegram, I am starting to buy this. I think we are at extreme fear. I showed you that VIX chart. I do believe, hey, my buy may not be the exact bottom. It could be. It could be. It may not be. And I'm willing to accept that we have about, I don't know, what is it? Let me look. 3-4% of pain to the downside potentially from here. But I do believe we are almost there. We may not see 6,200, so I'm starting to leg in given the numbers that we have right now. Hopefully that makes sense for you guys. Did I sell the extra gold trade? No, I never sold it. I told you guys to sell it. I didn't, but it's probably back up where you guys were last week now. Tess says we might get the full moon effect tomorrow, April 1st. I'm interested to hear about this one. Does this make sense for you guys? It's kind of a mixed opinion here. That I do believe, technically speaking, we could technically head lower, but I am buying right now. I'm willing to accept the short-term pain, assuming we do get to 6,200. It won't be fun for me, but I'm going to try and hang in there and stick with it. If you want to wait and be more cautious, if we get to 6,200, that's where I'm going to set up a dream portfolio situation. All right. Sector view. April's bullish across the board. Highlighted the strongest ones here. And when I say strongest, I mean it's the one that are outperformers, but also going from March to April, increasing, et cetera, et cetera. So we have technology coming back to life, financials, which would be great. Energy continues to heat up. April is the best month for energy all year long, which is crazy considering that energy has just been insanely hot. If this war persists, it will probably even get hotter. Industrials, 1.8%. That's really nice. We've seen a big pullback in industrials, like GE, HWM over the last month. I think those are setting up some really great buying opportunities. Materials is really, really good. I haven't traded a lot of materials. I really should look into them more, but very positive. And then real estate strong as well with healthcare, consumer discretionary. So a lot of good sectors to pick from. Last class, here were our top sectors. We did get some movement this week. You can see the bond market bounced back. Like I said, interest rates completely flipped week over week. Healthcare is bouncing back. That maybe I'm going to show you guys the next chart here, but communications dropped out, tech dropped out, Russell dropped down. These are all bouncing back now today, but here's our top sectors for the week. Energy, maybe skip utilities, but energy, materials, industrials. Let me just do this. Let me just highlight my favorites if you want to focus on a few. These are all my favorite of the favorites. And obviously, like gold, I like gold, but it's not a sector. I just have it in there to show you the relative strength. Oh, it's a good color. Let's go blue. All right, but XLV, I put in green here because it may be one of my favorite buys right now. Let's look at healthcare. Healthcare really has no reason to be looking like this right now. This is just the healthcare sector. Down $15. What is that? About 10%. 10% over last month in healthcare. Look at Eli Lilly. Amazing stock. I think it's going to be a monster stock over the next 5-10 years. In my opinion, an excellent, excellent discount here on some of those healthcare stocks. Seasonally, it's very strong, and relatively on the relative strength, it's gaining steam as well. So let's make sure you keep this. Actually, if you look at the magic momentum, look at that. Lilly popping some magic momentum right here today. Haven't seen that in a while. So while the momentum is still red, we're seeing that momentum start to curl and turn higher. That's what that magic momentum's looking at. I wonder what XLB looked like there. Not quite magic momentum, but pretty darn close. All right, so here's my favorite sectors for the week. Anything in the top bucket. I just made this look really ugly. Let me make a clean one. So if you guys go back and review this. There you go. Top sectors right now, my personal favorites. That's what that means. All right, let me see. Administrator, should we only take puts now when we do lotto board ourselves? No, I think that was like the last 2 weeks. I basically told you guys you got to be getting puts from the lotto board. What I would do, administrator, is look at this analysis every week. I guess if you want to, you would get puts and calls, or maybe just sit on the sidelines for a bit. It's kind of my opinion. That's why I haven't sent out any trades just recently. I want to see where we're going to settle so then we get a high conviction opportunity one way or the other. But this was your opportunity for puts. When we broke below that 200-day moving average, we were going down with the puts. I think Mark said he did 450% on one of the puts. Nitty gritty. All right, let's jump into some trade ideas. And then I got to jump off here. I want to make sure I'm on my time schedule for the 11 a.m. We'll start with the Apex. Oops. Top signal of the week. We'll see if we haven't had one recently. Obviously, we're not going to force one. I'm going to be shocked if we still don't have one. Let's go take a look. Alrighty. Yeah, no new signals. Nothing new for us here on the Apex, which will probably be the case until we turn back into a bull market. So that's one of the beautiful things about the Apex software. So the way it works is it's not going to be slinging out trades when we're dropping. It's high conviction bullish trades. So let me get on here. I think this is our third or fourth week. No new entries. Patience is a good thing, in my opinion. All right, let's go ahead and jump on over to the on the clocks dashboard, which will probably be pretty selective as well, as we don't have a ton of momentum breakouts right now. Let's go look. All righty. Hey, look, we got one right now. HL. Oh, good. We got a couple. Oh, Walmart. This is too good. Too good. All right, let's do Walmart. Roselia, let me answer that. Let me do Walmart and then I'll come back to you. David, remind me if I'll probably forget.
For who?
Roselia
Okay,
about the gold.
Rosalia. All right.
Yep. And you're gonna get a better price than me. But all right, let's go look. I like Walmart here. Walmart staple stock. Actually, is Walmart discretionary? I always have to ask. It's a staple stock. All right, cool. Staples, as you guys know, one, two, three, fourth best sector in the S&P. Walmart in a seasonal trend where if you buy it, hold 18 days. So buy March 31. Actually, let me just pull back here. I'll copy and paste it. All right. Let me do this. It'll be easier. Walmart. There you go. And then the average return during that period is 4.2%. Kind of perfectly lines up with the recovery. So look at Walmart here. Had to pull back like the rest of the market, but not nearly as bad. It's not even near its 200-day moving average. So a seasonal breakout here. Technically very, very strong. Strong sector. Gotta like Walmart. Let's go ahead and see what the options say. Let me just look at a few of these others too while we're at it. Oh, Lockheed. Interesting. All right. If you have the dashboard, I would look at LMT as well. That one could definitely do quite well. All right. I'll give you a basic call option for Walmart. Luckily, the program here does it all for us. But again, let me just tell you why I hate calls. I try to do this every week. If Walmart hits the average return profit target in 1 week, you make 77%. In 2 weeks, 65. 1 month, 31%. Look at this. At expiration, if by May it makes that move, you lose 5%. The stock went up 4%. You lost 5% on calls. That's just terrible. That's why I hate call options for the most part. Morgan, I've only been able to touch base with you guys sporadically, but how much does your seasonal annual charts line up with days? Morgan, when we're not in news-driven environments, they're normally very, very good. When we get into news-driven environments, you can just throw them out the window. If you want to trade Walmart, this one looks really good. Check this out. This is a very conservative income play. It pays out 25%. Get this, even if Walmart falls 9% over the next 4 weeks. So the strikes, what, 111, 112. So Walmart can get all the way down here and still pay you 24%. Pretty darn good in my opinion. I'm going to take that one right now, especially if you're fearful. If you're fearful, this is a great way to be, whoops, non-directional. Well, it's not, oh yeah, 111. 20-cent credit. Yeah, 21 is showing there. Let's see. I'll try 20 cents. I'll leave it on, see if it fills. It doesn't look like it has a ton of volume. So just make sure you use a limit order, guys. Don't go crazy dropping your price on the credit. With the credit, you want to go the highest amount possible. Moderate income, let's see what we got here. Alrighty. This one, I don't like this one as much. 55% payout on a 1% buffer zone. I would rather just go right to my wrap order. Let's see what the wrap order is paying on Walmart. Oh, it looks like the stock market is pulling back a hair right now. All right, here's the Walmart wrap order. I like this a lot. You need it to gain 0.3% over the next month for you to make 81% return on investment. Let me go ahead and see if I can find this one as well. 123, 124. Again, with the wrap order, you always want to get, oh, perfect, half the price of the, or half the strikes. Wow. You want to pay a price that is about half the width of the two strikes. So this is $1 width, 50-cent debit. That's perfect. Let's ship it off, see what happens. Filled right away at 50 cents. So that's going to be, let me edit this. 50-cent net debit. That's 100% ROI. So I can get 100% return on investment if Walmart gains about 0.3% here over the next month. All right. We'll keep on rolling here. Last but not least, let's go ahead and build our Newton watch list. If you guys have any questions, Claudia, did I take both Walmarts? I did take both Walmarts. I did the wrap order and the credit spread. The wrap order filled right away. The credit spread has not filled for me yet. So I set that credit spread at 20 cents. No fill for me. The wrap order filled right away at 50 cents. It looks like we're getting a small pullback in the markets right now. So it should help us get some of our fills here. I would love it. I would love it if the markets don't completely give up all their gains today, but it's not looking pretty right now. We're almost back down to the market open price. Here, I'll show you. Oops. Had a nice run this morning. Here's the open. We're almost back down to market open. We don't want to break the market open. Please, S&P, hang in there. We don't want to see another bleed out today. All righty, let's go ahead and pull up the Newton long and short watch list. Hopefully get you guys some good plays. Then we'll get out of here and wrap it up for the day. Oops. This could be interesting. Oh my goodness, Dell. All right. Newton long scan. Oh, this is a fun one. SATS play into the whole SpaceX SpaceX play. At least that's what I've been told. I don't know a ton about it. David, you might know more about SATs.
No,
Me.
I actually don't.
I've heard a lot about it. A lot of chatter about it. It's flipping positive on Newton. I'll add it to the watch list long. This next one I really like though. Let's go look at this one. This next one is our good friend Pfizer here. Look at that. Nice chart. We like healthcare, right? Check your sector. Healthcare. Healthcare is my favorite sector probably right now. Flipping positive here on the Newton and trending higher. So let's look at Pfizer. Could be a great opportunity for you guys to trade to the upside. And last but not least, in WSA. Don't like it. Not pretty. Oof. Not pretty at all. All right. Let's look at the short side. GEV on the short side. This is one of my favorite stocks. I'm not shorting that thing. It's a powerhouse. It just goes and goes. I bought a bunch of stock way back here. I'm having a hard time figuring out when to sell it because I think I'm up 190% on the stock, which is insane. I'm not shorting this thing. Cisco, strong trend. Oops, let's go look. Strong trend. Technology is a weak sector. You could short this, but I don't like shorting a stock that looks like this. I would much rather short one that's in a breakdown. BII, Biogen, healthcare. We're not going to short this one either. You can do whatever you want, but it looks like we have no short stocks today, which is insane. It's probably just because we're getting such insane day over day volatility flips that the markets are having a hard time. If you want one to short, oh man, what's a good stock to short right now? Unfortunately, it's probably Robinhood. I have a bunch of Robinhood. I think they're great long-term trajectory, but this definitely looks like a short. Financials is one of the weakest sectors. And look at this Newton flipping, breaking down. It has a long ways to run to the downside. Unfortunately for me, if you're looking for a short, I would be looking at Hood. I'll just add this on the list for a bonus for you guys. Let's say bonus. Which it really pains me to say that. It really does.
It's like turning your brother into the police.
Yeah, exactly. Yeah, I bought a bunch of Robinhood when it got down to 70. So I'm not underwater too much, but I believe in the long-term trajectory. That said, it really could get back down to 40 pretty easy. Let's hope it doesn't. Or my wife is going to kick me out of the house. Oh, Option X just triggered Walmart. There you go, Chris. I like it. Little triple confirmation there. All right, awesome. Well, we got done with about 5 minutes to spare.
Almost, because you got to answer Rosalia's question about the gold trade that ended today.
Gold. Yeah, I did. I took it last week because I looked at the strikes and said, man, we are nowhere near 445. But now with this pop back in our favor, if you want to exit, I exited early. Here's kind of what you're looking like. Let's look. So you need to move to here. See my crosshairs? Let me just do this. So it's not out of the equation, but you really just need gold to move higher and higher over the next 3 days for it to get to 445. So I just went ahead and took it early. I think it was an 85% loss for me instead of 100% was my thinking. Just because it's a bit of a stretch. If you just map out the trajectory of gold on the current pace, it's probably going to be 440s if it keeps going higher. 445 just seems a little bit out of reach. Now, if you guys did that one last Tuesday, you should be up really nicely on that one. Oh, Friday is a holiday. Thank you, Bob. Friday is. I was wondering, like, this looks like only 2 candles worth of space here. Friday's a holiday, so even more. Yeah, we definitely don't have time. We would have to see something very extreme happen for gold to get to 445 by Thursday. Thank you, Bob, for reminding me.
Well, it's about 5 to 11, and I know you have a demo for 60-minute income going on in another room.
Oh, nice. Yes, that is awesome. Totally awesome. I'm very pumped about this. Let me show you guys something. Let me show you guys this. First off, who here is a member of 60 Minute? Can I get a holla holla in the chat if you are? I'm going to read you guys some numbers here. And I've been telling you guys this for a couple of weeks now. Man, this thing is so hard to predict. I've been skipping our market predictions. I've been just saying like, hey, this is we're just going to not make a prediction this week because it's such a coin flip. I'm pretty much not trading a lot of swing trading. I am just sticking to 60 minute and that's it right now because that's the only thing that's working and consistent. We went on a pretty insane when the volatility started picking up this year. Start to the year. This was an $8,000 run that's based on $1,000 starting out. So that's an 800% net return over the first 2 months of the year. 800%. It's insane. Then what you see here, obviously there's some losers. That happens. But what you see here, you see this new column started in here. We had Jason, who hopefully you guys have met Jason. Say thank you or say we love you, Jason, if you guys love Jason. Went through all of the trades going back to 2022 and then basically said which ones won, which ones didn't, what were the factors at play, how was the VIX, how was the VIX one day, how was the VOLD, how was the opening rate breakout size range, how was the gap, day of the week, was it an early fill, a late fill, put all of that information together to give us very specific position sizing rules. So we know, hey, we're going to take 1 contract today, we're going to take 2, we're going to take 5. That's all now part of the program. It's a new upgrade we just had. And now here's the really cool thing. Since March 4th, so this month, it's actually struggled. This is the core program. It's up $27. So it's still up 2.5% when the stock market's down 10%. Can't complain about that. But up 2.5% from the original rules before Jason made the updates. Original rules is just if you did $1,000 in each. How did it work out this month? Well, you kind of broke even. Can't really complain, but man, wouldn't you like to make money? Well, we also, and I personally have been trading the Jason rules since 3-4, since we had that masterclass. On $1,000 starting out, we are up, and I'll just make this so you can see it down here. Look at the sum of, whoops, my thing came up. Sum of,
Yeah, we can see it.
$2,500. So original rules, we're not down. We can't complain. We're pretty much break even in a terrible market. Nope. We got new rules right now. Allocation is changing everything. We're up 250% net ROI if you look at it from that standpoint on the month. $2,500 on 1,000 starting out. If you start out with a $5,000 account, you're looking at what, $12,000 in March. I am very, very excited about this newest update. And the crazy thing is the best is yet to come. We've got new updates and upgrades coming for you guys. We will always continue to optimize this and make it better and better. I think it's the most fantastic strategy right now and in all times. You guys know when the VIX gets below 16, we've been sidelining. We've got a new thing coming for you guys. Obviously, we got some time till that happens, but we're going to find ways to make money every single day in all sorts of markets. Winners and losers, doesn't matter. Look how that stacks up with the newest position sizing rules. $2,500 this month. It would be even better if we had it started since the beginning of the year. But again, without the position sizing rules, year to date, $8,000. So, anyways, I'm jacked up. I'm
That's
saving a lot of
awesome.
money.
All right. Well, we got 2 minutes. So
There you go. Cynthia, 24K so far this year, trading only 7 of those weeks on a 4K investment. That is awesome,
very
Cynthia.
nice.
You
Very
guys
nice.
definitely don't want to miss this right
All right.
now. It's
The
the
link
best way
is
to
at
trade
the
in this unpredictable market.
Sorry. Link is at the top of the chat and in the banner and in the announcements. Head over to Zoom and we'll see you over there in 2 minutes.
2 minutes. See you guys.
All right. Let me get this up here and then we'll move over.